please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. No letting up as far as the bulls are concerned. The market's still very close to all-time highs, 11,324. So made up one day's losses, but it's not at all-time highs. But very good breadth. 4 stocks in the green for 1 in the red. Let's discuss the stock which has excited investor interest now. Kotak Mahindra Bank has issued non-convertible, perpetual, non-cumulative preference shares worth 500 crores. And that means 100 crore more shares in the paid-up capital, bringing the promoter stake down to just a smidge below 20% as per Reserve Bank requirements. Sandeep Parekh, founder of Sensex Law Advisors, joins us on the phone line to check whether this will meet the Reserve Bank requirements. Sandeep, good morning. Thanks a lot for joining us. We had Jaimin Bhatt telling us that their license agreement required that the paid-up capital should be so structured that the promoter comes down to 20%, and that's exactly what it is with the preference shares. Does it meet Reserve Bank requirements?
Preference shares are kind of somewhere between equity and debt in terms of both accounting standards and terms of first principles. Now, this happens to be not a regular preference share, but a perpetual preference share, so it will never be redeemed. So it seems to be much closer to equity. And therefore, my guess is that this will meet the RBI requirements of reduction of control. The only catch here would be to look at the fine print in terms of how much of control is going, because RBI would like to look at that. And if preference shares don't ordinarily have control, but in this case, if they do, then I think it should be okay. But if they don't, I don't know.
How would they get control? If they get voting, right?
Right.
I think they are non-voting shares because Mr. Jaimin Bhatt said that in any case, under the Banking Regulation Act, shareholders' vote is restricted to 15%. Please.
So in which case, whether it's
So if it's a non-voting share, then what is the Reserve Bank position likely to be?
Is that for me?
Yes, you're the only one we are speaking with.
I think that if the votes are not going down, then RBI may have an issue with it, because I think the issue is not with respect to increasing net worth, which these would qualify for, but with respect to change of control. So I don't know if RBI will have a view on this.
What about from a shareholder standpoint, the dividend payout issue? I mean, is there any corporate governance issue with respect to the dividend payout? I mean, 40 crores will go to preference shareholders. So, you know, the other shareholders could be perhaps deprived of the dividend. Would that be a concern at all?
Unlikely, because, you know, ultimately it's a trade-off between kind of not a guaranteed dividend, but and that's why they call preference shares. There's a preference as to dividend, and if there's any potential liquidation in the distant future, then they get preference over equity. So these are the two preferences, but what they lose is control in terms of voting rights, except in certain situations which are mentioned in the issue document. So I would think that equity guys should not have a problem, because to that extent they're not getting diluted. But at the same time, you know, the dividends go in preference to the preference shareholders compared to the equity. So it's a plus and minus.
Okay. All right. Sandeep, just come back finally to the Reserve Bank's position. Clearly, Kotak Mahindra Bank would have checked the letter of the law. And their license agreement, Mr. Bhatt told us, speaks of paid-up capital. And they meet those norms with the issue of preference shares. Will they, RBI, look at that? Or will it look at the spirit? What do regulators normally do?
Essentially what I said in terms of, you know, what do they want out of this specific regulation? I think there are two separate things. One could be increasing net worth, which doesn't seem to be the intention of RBI.
Yeah.
RBI is more primarily looking at reduction of control of the promoters. So if that is the intention, then this would not bring down the control of either the promoter or the other shareholders. So RBI may have a view on it, but again, if they've done this, I'm sure they've already spoken to RBI and taken their go-ahead.
Yeah, they may have. Although they told us that they communicated yesterday, it's quite possible they may have spoken earlier. It's just that maybe in future Reserve Bank will write its license agreements differently, you think?
Yes, because, when it says issued capital, it would include preference shares in the definition of issued capital. They are certainly fulfilling the letter of the law.
Certainly. Okay, we'll have to wait and see. This is going to be a topic of interest both in legal circles and, of course, in terms of what the Reserve Bank might do in regulatory circles. Thank you very much, Sandeep, for joining us. We take a break and we're coming back and focusing on, again, one of those biggest mid-cap movers yesterday, Venky's. Of course, it's a very interesting stock for the last 2 years. It's created a lot of wealth. B. Venkatesh Rao, Managing Director of Venky's India, in a minute.
Hi, welcome back. Well, as promised, Venky's is on our radar. The stock has seen a stunning 40% rally since yesterday morning on news that the company was out of SEBI's list of additional surveillance measures, or the ASM list that we call it. The stock rose 20% after as it exited ASM. B. Venkatesh Rao, the MD of Venky's India, joins us now to talk about the business as well as, all this confusion with regards to the ASM list. Mr. Rao, good morning. Any idea on what led to the exclusion from the ASM category?
I think good morning, man. First of all, good morning to you. And I think I exactly as I've been telling last time also that for some reason, some bunch of companies had come under surveillance or whatever, but it was totally the trading part of it, not the business part of it. So I think they came to a conclusion, and I think they sorted out without asking any queries with the company. So it's nothing to do with us again, as I said. Thank you.
No, nothing to do with the company at all. I agree. It must have been trading patterns, number of clients, number of positions, and things like that. But could you figure out what led to the inclusion into ASM and what brought it out? I mean, could you figure out from investors or regulators?
It's simple. I think because the jump what it took from 400 to 4,000 plus, and then naturally it has to be gone through the process, and if it is something happening very quickly, then it naturally comes under observation.
Okay,
Simple
fair enough. Let's get back to the business then. The last time we spoke to you, you said there's some pricing pressure in the market because of a glut that you're noticing. Have things gotten better?
I think, ma'am, right now the position is that because of the festival season, again, I think there's a little bit of a glut, and the rates are coming down on the broiler particularly, hatching eggs particularly. This happens throughout the seasonal time during the year, so there's nothing to get worried about. But it should start picking up from October, November. It should start picking up. So there will be a little bit of a glut in the market because of the seasonal intake of non-veg is accepted. If the percentage goes down, basically.
You mean for Ashad, people don't eat non-veg or something like that?
Yeah, a number of people, a huge percentage which comes down in Ashad, as you said. Yeah.
Okay, let me just get a word in on your milk nutrition products, malt drinks, whey protein. First of all, what is the size of that business as a percentage of the total? And even over there, the milk guys are talking about glut.
Well, I don't know about the milk guys, ma'am, but yes, I totally believe you because sometimes we don't get milk because of this strikes and vagera. But it is hardly any percentage. It is about 2 to 3% what we are, this protein and this chocolate drink what we are producing right now, and it should start picking up slowly.
Okay. What is the production capacity overall for your poultry business, I'm asking? And if you told us about the price trends, but if you can just put a number to that, how much have the poultry prices fallen over the last, say, 2 months? And what is the expectation, 10%, 15%?
Okay, I'll give you a short brief. The layer business, what is the total production per annum is 238 million production, which we hold about 80% of the market. And broiler is about, I think, 40 crores per month, which we hold about 75% of the market. And as far as maize and soya, which is the raw material of 75%, which totally depends on the production costs this year is 10 to 15% more than last year. So it's a good news that raw material is available for the poultry farmers, small, big, medium, everybody, for the industry as such. So we have to just watch and grow according to 10 and 12% per annum, there where the mantra is. So that is the whole equation.
You are undertaking any expansion of the poultry products business?
Yes, we are increasing our capacities of parents, particularly in South, North and West zone. So our productions will go a little bit of according to the requirement of the market. We are the placements are increasing. So naturally, the hatching eggs capacity also will go up, and we are also increasing on our pattern of feed milling also geographically throughout the country. So it is going to be quality stuff coming in.
Okay. What's the market share that you enjoy right now, and any changes post GST?
We enjoy layers. We enjoy about 80%, and broilers we enjoy about 72% in the Indian market. And GST is not, of course, it has to understand and study. It took a while, but I think things are settling down because one-time tax. So things are settling down fully and steadily, ma'am.
Okay, your margins for FY18 were a huge 14.5%. They get better this year, FY19?
After the season, after the festivals, it should be 8 to 10%, I think, because everything the crop looks good. Particularly, again, it depends on your production levels. If everybody puts the heads down and according to the parameters they increase, I'm sure the 8 to 10% will be a good rise.
Okay. See, milk products, a small 2%. Any other products you will diversify into?
Well, we are also coming, as I've been last time telling you, the soybean plants, extraction plants, which are coming in production after 6 months, those will be in action. The vegetable oilseed plant, the vegetable oil plant also is coming in production. So these are a couple of, and further processing, of course, we are coming in. Venky's Express is ours, but Venky's Experience, we are going to give it out for the middle tier businessmen. So it is all coming slowly. And of course, the further processing, as you hear recently, McDonald's has 250 restaurants, is going to come up to 500 restaurants in a couple of years. So there's increase in the further processing products also.
Oh yes, a lot of demand. I must say, we haven't even spoken about KFC, have we? Thank you very much, Mr. Venkatesh, for joining us and giving us those details.
That's made us hungry, right?
No, actually, we talk of hatching eggs as, people doing nothing. But for hatching eggs, if you're making a 3,000 crore business, then it's worth hatching eggs. We have to wind down on Bazaar on that note. We leave you with the highlights of the past 2.5 hours, which have gone to the bulls, lock, stock and barrel.
What we have realized, this quarter is likely to continue for couple of quarters. Preference shares which have been issued are non-convertible, so they won't affect the equity dilution. Auditor का जो resign वाला जो matter था, उसको लेके जो है करीब 40-50% का फर्क पड़ा.
For Nifty, we expect an earnings growth which is a little over 20% for the current financial year.
This could be a year where, for the industry, you could see a growth of about 10 to 12%.
The book would continue to compound at north of 30%.